This is Scott from Scalpel CD Trader, and this is the SI indicator, the first section of the setups that I use to trade off of, the core of my trading. Please take a second to read this disclaimer. So the first setup is called the Dumb and Dumber. All my setups and a lot of the things I do in my trading are try to put a little humor into them to lighten it up, and it actually makes it a little more memorable as well. So a lot of these names are funnier names, but it'll help you remember them. So the Dumb and Dumber setup is a threshold stop run event that ultimately fails and reverses direction. The methodology behind stop runs are that they are highly likely to be retail traders, aka the dumb money, which is the uninformed money, puking out of positions with no real buying or selling behind it, meaning the larger players. This is incredible information, as stop runs are not inherently initiative buying or selling. It is usually the forced unwinding of positions that have a high percentage of being fade types of trades. So anyone who's traded, if you haven't used it as stop run, then you're probably not in the business anymore anyway. But most traders, when they place positions, put positions on, then they place orders to get out, where they're not having to hover over the dome to get out of a trade if they're wrong. So these are these types of trades that are signified on this chart, on the sub chart, where you can see here, this is an example of a buy stop run. I labeled it. So the other question I get on, especially with my first course, is where do I get these numbers? I don't see these numbers on the subchart. So I put these numbers in just to help, but you can see, based on the key over here, that it's close to 1,000. But I just put these in so you guys can see the actual volume that's firing off here. But this was an example of a buy stop run in ES, 843, and you can also see this on the sweeps indicator. We'll talk about this sweeps indicator in another section, but it helps you draw your zones, as we talk about again in another section. But this was this zone area that the stop run fired off, and you can see it went a tiny bit higher and then rejected. So again, stop runs are usually the unwinding of positions. Yes, you can stop into orders. If you want to initiate an order, you can stop in order. But the majority of times when you see these large sums, they're just areas that retail traders or a few larger traders are not usually. The big money doesn't usually stop runs like this, but they get out in different ways. But usually it's the retail trader puking again. It's usually a fade type of trade. So you can see here. So the way I trade these, there's one or two entries to trade these, is to wait for a retest of these zones. And again, we talk about this in another video as well. Or the minute it fails out of there, you can take it, because a lot of times the market will not come back to the volume event. So you have to decide based on your area that you're looking at, is if you're willing to wait for the retest. Yes, this is a higher percentage that this will move lower. If it moves away, comes back, and then gets back below that first low, that's a higher percentage type trade. But you may not get that type of trade, and it just keeps going, and you're sitting here cursing yourself that you didn't get in right away. So you have, this course does not go over exact areas that I use as far as the charting and Ludwig levels and things like that. This is just pure trading and understanding these volume events. So it's up to you to understand, like I said, if this volume event is strong enough, or the area is strong enough where you want to take the trade, the first move out of here, or wait for the ATR or retest type of trade. And we go over the ATR method again in another video. But in my first course, and this is still valid, I have moved away from getting in right when the market breaks out of the volume event. So in my original course, it's a way better risk reward for your money, but there's a way you get chopped up if you decide. So for instance, this one, this is a buy stop run, and in this case,
Good morning, traders. Welcome to the European session now on financial news. This news then brings us German inflation data in the form of CPI.
Sorry about that. If you wait for the first move out of here, you can get in the minute this breaks out of the zone on the red bubble, and then place your stop right above here. and it did come back, and you actually would have avoided a stop out and move lower. You know, I've learned over the last few years that the best way for me to trade these is to wait for the market, to whatever market you're trading, to be able to push a full ATR plus a certain percentage outside of the volume event. Again, we talk about this in the other videos. Before I decide to get in either aggressively or wait for the ATR retest failure. So, you know, there's something to be said for taking these trades the minute they break out. If you're the type of trader that's okay putting it on multiple times, this is probably a better method for you, because there's going to be times, like I said, where this thing spikes around, whipsaws around these volume events where you're going to get stopped out a couple times. So I prefer waiting for any of these events, as we're going to go over, either, you know, again, waiting for an ATR and then getting in aggressively, or waiting for the ATR failure and getting in. But you can, you know, get in the minute it breaks and put the stop right above, and that's a better risk reward, obviously. So again, this was, yes, this one did retest the area and then led to a nice down move from this area. It's good. I think this even went a little lower, but this was a good 9 points away from this puke. And so you're going to notice some of these do move away, retest, and fail, and then some are just gone. So that's what I'm trying to get across to you guys. You have to decide in your area if you're willing to jump in right away in case it doesn't come back, or you say, you know what, I demand a retest. So this one did move. Looks like it was about definitely an ATR. It was probably 5 or 6 points out of here. Retest failure. But again, this was a move down. You had 503 stops, sell stops, and this is another indicator too. We'll go over this in the sweeps indicator video. But you know, when you see this puke, these sell stops, so you know inherently it's not initiative buying or selling most of the time, right? And then it moves out of here, and then you see buy swipes come in right after that. That's just telling you, one, this wasn't real selling, and two, now someone's actually really buying it with swipes, and that is just a great indicator that this thing was going to rip, and that's exactly what it did. This was a nice 17 plus point trade there. It did end up coming back here, but again, you know, these videos are not made to talk about where you get out of these trades, because you have your own areas. Everyone has their own areas. But the point is, this did have a very nice move before it came back, and you can see it did react at this volume event. The next example is crude oil. So this is an example of the market did move a little lower outside of this volume event. You had almost 300 stops. It did move a little lower, but never got the ATR outside of here to make this a bearish setup, which would be a stop and hold that we cover. That's another one of the setups that we covered in another video. But you know, this still held, and once again, you could have gotten the minute this thing broke above this zone and you see blue bubble, buy it there and put your stop below there. Or you can trade the way I trade it and wait for your ATR. This is an example where this market did not retest the zone. So if you were looking for a retest, you didn't get it, and you missed a very nice trade. This is a 100-tick trade, a full dollar move out of here. And if you're waiting for a retest, no go, right? So this is what I'm talking about. If this was an important area, you may say, hey, that's a dumb money puke. And then once again, here, this is just like this last example where this isn't part of this setup, but just in these last two examples, you can see, and this is not a real selling as far as initiative. And then you see buy swipes. That's just more of an indicator like this thing is going to reverse the other way. So it's back-to-back examples like that. But again, this one did not retest, and don't pay attention to this zone. This was something else that day, but this was a vintage Dumb and Dumber. This example is another crude oil example. And you will notice too, you know, the bigger the size, from my experience, the more likely you are to see reversal, you know, over threshold. So threshold for crude, for instance, is 150. You get this in your document that has all the threshold for each product, all the thresholds for each product. But when you start seeing this kind of size, I mean, that's just prime for a reversal. So this was, you know, 6-7 times threshold stop run, And this one did look like it went the ATR and the retest, so this one did retest, right? So again, you have to decide if you're willing to take this. Like I said, that this is a higher percentage trade that is going to work if you can get the move back, bounce off the zone, and then get back above. That's a higher percentage trade, but you're not always going to get it, like we saw in that last example. So you have to decide for yourself based on your what you use to trade with. And this turned out to be, you know, this, I think this proved higher too, but this was 70 tick trading counting off of that area. This one was a nice gold Dumb and Dumber where you had buy stops here, and once again you did get your retest, and that would have been good to go there. But here's another example where you just said, here's your buy stop run. If you wanted to get in right when it broke below the zone, put your stop above. That's a much better risk reward than waiting for it to get the full ATR out of here, like we talk about in the coming videos, right? So again, your decision. I personally wait for that, like I said in the other section, where because I don't want to get chopped up, and I've seen these markets do this, you know, a bunch of times. But if you're willing to get in right away, this is another one that never even came close to getting back up here, and that's much less risk than waiting for it to get down here to take the trade. But either way, this was still a nice winner in its own right. And next one is another crude example. I don't have a value on this one. Looks like it was close to 500. This was the iceberg charts, but they're usually synonymous, pretty close. It's again, boom, puke. This one did do, looks like an ATR. It probably right around ATR. There's your retest and another nice move down. This was 70, 80 ticks off of this area. And then let's see, we got some other examples here. This one was wheat. So you can see, guys, it doesn't matter what market you're trading. I say this all the time on my webinars and my room, my trade room, so on and so forth. It's the same stuff. It's traders puking. This one did the retest, and you got this is a very big move in wheat, right? All initiated when these guys puked them out. No real buying behind it. Failed. Here's your retest. Great trade. So these are great examples of what this could do. So this is an example. This is NQ, and pardon this. This was just I had this ATR section for another type of trade I was doing, but this did move. You had the buy stop run. Again, I don't have the value here. It was right around 200. It looks like this did move outside the zone, but at the time, I distinctly remember this day. This was not a full ATR out of here. So again, based on my rules, if it got an ATR out of here, I would not take this short, but it didn't. And you can see this did fail, but this didn't. This is one that did not retest the zone. So either way, there was the stop run. It got a little higher, and you can either get in right when it breaks below there, put your stop back above. You don't get stopped out on that one either, or wait for the full ATR and get in that way. But either way, this is another very nice, 70-point plus winner. And then this is an ES example. This one looks tiny compared to everything else that fired off after this. We're not obviously covering these other setups in this video, but this was sell ice. But anyway, this was a buy ice. A buy stop setup, and went a little higher, and it did move below. This one you would have sweated out if you got out right below the zone, because it did come back. You look like you would have avoided a stop out there, but this is another example where this did not retest and kept going. So this was a 25-point trade from this area, which is a very nice trade in ES. And let's see what else we got. Another crude example. This was 221. And did move a little lower, didn't get the full ATR, which is my disqualifier. Never got that far below there, so I can still take that long. And this is one where it didn't actually get fully back to the zone, where you would have to take this aggressively, but this did. This was instant rejection out of here. And another wheat example. I don't have this one labeled, but this was probably, looks like it was around 400-ish. Another example of where this didn't retest, but you could have, the minute gets back out of here, you start seeing blue bubbles, you can get in and put your stop on just on the other side. You can put an ATR on the other side. So, as we get into these setups, once again, like I always talk about in my webinars, this is the science, right? There's no disputing there was a stop run here for, actually it looked like it was around 400. There's no disputing that. How you trade this is going to be up to you, right? You need to figure out what type of trader you are. Are you the trader that doesn't, so many traders don't like a ton of risk. I just from, like I keep saying, just from so many beatdowns of this type of trade around the zones, I've demanded that the market move an ATR out of there before I put the trade on. But if you're okay with getting in and saying if it stops you out once, you get in again, or twice, I probably wouldn't do it 3 or more times, but if you're okay with that, then get in right when it moves outside of that zone, and you can put your stop right on the other side of the zone. Again, that's the art how you trade it. We will once again go over my ATR, how I trade personally. You can use that method, you can change that method, you can meld it into your own stuff that you're doing. The options are endless. The point is, that's the science. If you can understand that in this area, then you already have a distinct edge. And that is actually the last example for the Dumb and Dumber. And that's it's just a great trade, a great fade trade for areas. If you're looking to fade areas, this is just one of the best setups out there for fade trades. Thanks.